Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Broadcom surges as it signs a multi-year agreement with OpenAI to design custom chips and networking equipment. Plus, markets bounce back as President Trump signaled openness to a deal with China amid the latest trade showdown, what it means for tech and rare earths. And Warner Brothers Discovery has rebuffed Paramount Skydance's initial takeover approach for being too low, according to sources. We'll have the latest. But first, we go out to the Middle East, where President Trump is in the middle of a visit in recognition of the end of the war in Gaza, with both Hamas and Israel releasing hostages and prisoners today. Let's go live now to Bloomberg's Oliver Crook, who's in Jerusalem for the latest Sunsetting with you. We understand now President Trump has arrived in Egypt.
Yeah, that's right. Really, the sunsetting here and closing what is a truly historic day for the region and certainly for the Israelis, where we've seen, as you said, Caroline, the release of the last 20 living hostages into Israeli custody. They're now back on Israeli soil. The release of those prisoners from the jails and being held by the Israelis back to the West Bank, back to Gaza, back to a number of other places. A deal that was struck by President Trump through his sort of unorthodox foreign policy, and something that really was inconceivable 2 weeks ago. The next step now, the next chapter is beginning in Egypt. As you can see, Donald Trump sitting next to El-Sisi, the president of Egypt, to try to figure out the sort of very difficult phase 2 of this, which is what do security conditions look like going forward in Gaza? Hamas is still armed. They have not agreed to put down their arms. That is really a precondition to make any of the sort of ambitious plans of the Trump 20-point plan come into being. That is a requirement. And of course, the question long term of governance of Gaza, this so-called board of peace that will be chaired by Donald Trump and potentially other leaders. Those are the conversations that will be beginning right now in Egypt.
Bloomberg's Oliver Crook, a long day. Let's now listen in to President Trump as he speaks in Egypt.
And it continues till today. So I want to thank you all very much. I appreciate the way you covered this really momentous, I've never seen anything like it. The level of love, the level of respect for what it is. And it's peace in the Middle East, and everybody said it's not possible to do. And it's going to happen, and it is happening. It's before your very eyes. And that's why it's become so fascinating. Marco, do you have anything to say?
Egypt's been a phenomenal participant. I think both Steve and Jared will tell you the critical role they played, and they can tell you themselves. They hosted the talks here, and they're going to play a very important role now in the follow-up, the implementation of this, which is really, it's not simply about restoring Gaza, it is about transforming the region. So we have an incredible partner, a long alliance, very capable partner here, and a tremendous collection of leaders. This is clearly, in my mind, I think in the mind of everyone in this room, probably one of the most important days for world peace in 50 years. And that's not an exaggeration.
Only 50?
Maybe 100. Since the end of World War II.
Mr. Witkoff and Mr. Kushner, I'm curious, you played such an important role in the tactical negotiations here.
As a lot more has to be brought to the table here.
Oh, the minute we had inked the deal, Jared and I were already working on the implementation side of the deal. So we're dug in. We'll be here quite a bit. That's at the direction of the president. That's probably going to be one of the most important phases here. Jared is remarkable to work with. I talk about it all the time. And of course, we both love working for the president. So it's feels like a very honorable job.
Mr. President, would you like to say something with the interpreter?
Yes. اسمحوا لي في البداية أن أنا أرحب بفخامة الرئيس. أنا سعيد وكل شرف موجودة في شرم الشيخ مدينة السلام. يسمح لي فخامة الرئيس أن أنا اسمي وباسم كل المصريين ويمكن حتى وكل محب السلام أوجه لك التحية الأهلية والاحترام على تحقيق هذا الإنجاز الرائع والعظيم.
Well, first of all, Your Excellency, I welcome you to Egypt. It's a great pleasure and an honor to have you with us here in the city of peace, Sharm el-Sheikh. Allow me also to extend, on behalf of all Egyptians and peace lovers around the world, salute, the appreciation, and the respect for this unprecedented and momentous accomplishment by your hands.
أنا كنت متأكد فخامة الرئيس أنك الوحيد القادر على تحقيق هذا الإنجاز والإنهاء.
I've been very confident that Your Excellency is the only one who is capable of bringing this about and bringing an end to this war.
وأنا في خلال اتصالي بفخامة الرئيس ذكرت له ذلك بدقة. قلت له فخامة الرئيس أنت وحدك القادر على تحقيق السلام في منطقتنا.
I even said that very precisely during my communication with Your Excellency, that you are the only one who is able to bring about peace and to achieve peace in this part.
We head back now to Jerusalem. Bloomberg's Oliver Crook stands by to interpret what is currently a momentous occasion in Egypt. President Trump alongside the leader of Egypt. Oliver, just interpret the next steps that everyone now focuses on.
Yeah, I mean, what is going to be the next step is really marking the moment for which we shouldn't sort of undervalue how significant it is, and that is going to be the signing of this sort of peace document, sort of ceremonial moment by presumably Donald Trump and a number of others who have been very active in the negotiations here. I mean, there have been a few nations that Trump has talked about a lot being very actively involved in the negotiations. Of course, the Egyptians having played a crucial role, the Qataris, of course, as we know, but then quite unexpectedly and quite significantly, the Turks and President Erdogan, who really came in and put a lot of pressure to bear on Hamas, which we understand it was really the Qataris and Turkey that put that pressure onto Hamas, that got them really over the line to come to this agreement and finally release those last 20 hostages. That has been the sort of one of the main war aims of the Israelis. One was to destroy Hamas. The other was the release of the hostages. And as far as Hamas will be viewing the situation, really relinquishing their last sort of piece of leverage that they have against the Israelis. So absolutely significant. So bringing all of these nations together to start to discuss what the sort of post-war, the day after architecture looks like is, I think, was always going to be the most difficult part of this conversation. And that is a conversation that begins now with President Trump sitting alongside President Sisi in Sharm el-Sheikh and starting to begin to build those coalitions of trying to build a security apparatus within Gaza, one that is both credible to the Israelis and to the Palestinian people, in order to bring in this sort of technocratic Palestinian-led governance structure that can sit atop of Gaza in order to facilitate the rebuilding and, of course, getting aid in, and ultimately, potentially, and this is a provision theoretically that is possible with this 20-point plan, a Palestinian state.
Oliver Crook, live from Jerusalem. We thank you very much indeed. Now let's turn our attentions to the broader markets right now. It has been a risk-on mood to those that are participating. We're at 1.5% on the Nasdaq 100, a bounce back from Friday when the anxiety around US-China relationship dialed back risk-taking. We now see 1.5 points added. It's interesting that, of course, we've got to dive into the AI side of the story. The key deal that you've got to keep an eye on is that between Broadcom and OpenAI. Absolute surge in this particular chip stock. It's going to design not only chips, but also networking equipment. We're up 9%, $150 billion being added to the market capitalization of Broadcom. We want to dig into that exact story right now because Bloomberg's Seth Spiegelman joins us. And this is interesting because NVIDIA and AMD seem to be able to get deals, but had to sweeten them for OpenAI. This time, it's just plain old $10 billion for 10 gigawatts, it means, Seth.
Yeah, I mean, we're still trying to figure out the exact financial contours of this deal, but it's also a bit different than some of the other deals that we've seen OpenAI do recently. I mean, they're trying not only to pave the way for more computing capacity, but also to play a more central role in sort of the stack that supports AI by working with Broadcom to begin custom designing their own chips. And I think we should expect to see more of this from OpenAI in the next couple of years as they want to be, kind of simultaneously owning the AI models, but also starting to have some proprietary intelligence into how to best set up data centers and chips to facilitate those models.
And it's interesting, Broadcom, of course, doesn't supply the data centers, but it provides a lot of the equipment that's going to be going into them, Seth. What is the argument? How much more efficient can your own design chips be? Alphabet already does it, for example, with Broadcom.
Yeah, I mean, it remains to be seen, but I think for OpenAI, there's a couple clear incentives here. One, it doesn't have to, it's at the front of the line for these chips. Two, as it is closest to its own AI models, its own needs, and the future of AI development, the company might be best positioned to figure out what it most needs from the chips out there. And three, OpenAI has a lot of experience now in setting up these data centers. So when you think about the chips, racks, and servers, it has a unique proprietary perspective on how to best design these data centers. All of that combined might help OpenAI cut costs and also build more efficient systems. times.
Bloomberg's Seth Fiegerman, we so appreciate you joining. Let's get a portfolio management perspective right now. Uday Chiruvu is portfolio manager at Harding Loevner. And Uday, I'm really interested in the fact that you've got holdings in NVIDIA. You're clearly a supporter of the AI theory, but are we looking at a bubble and then you get these sorts of deals?
Well, you've got to look at it two ways. One, in terms of the timing of the deals. If it is a bubble, it's potentially an NPV issue. Is it, are we going to get all this revenue in 10 years' time or 5 years' time? And that's what the market is trying to figure out right now. People try to compare this to the dot-com bubble, etc., but there's a difference here. A lot of the companies who are buying a lot of these products are supported by strong cash flows, free cash flows, which means that there is potential for these revenues to come through, especially if AI demand take-up goes along the lines of what we're seeing in the last 2-3 years.
I mean, none more so have the financial flex than NVIDIA.
Yep.
And it's interesting that NVIDIA, when signing that 10 gigawatt compute capacity with OpenAI, did give $100 billion in terms of support buying equity. Is those sort of circular financing deals something that gives you pause, or do you think that that's part of what the deal needs to be?
No, that does give us pause. You do look at that and say, hang on, this is not clear blue sky. There are some things we need to think of. So that's why the next 2-3 years are going to be really important. Because what we want to see is the return on the capex that companies like Alphabet, Meta, a lot of these big companies are spending to show up. If it shows up, then what you realize is that this $100 billion is not circular, but just the Kickstarter. So that's what we want to try to see.
I mean, you own Meta, and Meta has shown up in terms of generative AI being folded into the advertising model, being able to be built in and bring real revenue to bear right here, right now. But how long are you going to have to wait for Alphabet's bet to really pay off? We already see in NVIDIA, but do you think more broadly OpenAI eventually really showing that productivity is going to gain them in terms of revenue?
So from an Alphabet, from the software company's perspective, we do think that the next 12 months are going to be really important. What you do need to see is not just the return on capex going through, but the revenue growth coming through to support that in 27, 28, that we are going to see a continued acceleration or at least stability in revenue growth. Without that, it's very hard to see how the market gets really comfortable with the amount of capex that's being spent right now.
I mean, you just said it does give you pause, and there isn't just blue sky when it comes to NVIDIA. So have you just been trimming some of the exposure? Has now been the time to just stay holding pat and not adding to some of the overall portfolio exposure to some of these names?
So we tend to think of in terms of longer term. So what does this look like in the next 5 years? When we look at it from that perspective, the valuation doesn't look extreme at this point in time. It does look at give us a pause in terms of, look, what else do we need to factor in to keep buying more? But at the same time, it doesn't give us any fear that, hey, this is an imminent bubble as you asked at the start.
Well, on Friday, there was a lot of pause between US and China, and particularly access for some of these companies to rare earths that ultimately are very dependent on China. How much have you been baking that into a supply chain headache for some of the companies you own?
So that's, again, it's a timing issue. So there's two parts. The first part is this become a prolonged issue, geopolitical issue? Then there's a lot of other things that you need to think of, not just the semiconductor companies, but all the FMCG companies, all the other companies that sell into emerging markets and all global trade. So let's set that aside, that this is a solvable problem that gets solved at some point in the time. Then it's a timing issue. Already what the companies are telling us is there's a real supply issue, that they don't have enough computing power. So that means that people who make these chips benefit from any of these supply chain issues, because to them they get pricing power in the short term. But in the longer term, this gets solved, so it's a temporary issue. So if anything, these sort of market dips is an opportunity that you look at saying, what are the good quality companies that you do know have pricing power that you want to buy into right now?
And what are they, if it's not the obvious AI winners and darlings we've already seen hit $1 trillion?
No, they still remain, as I said, they still remain attractive. But there's a broader spectrum out there. If you look at companies like Delta Electronics, which provides electronics and cooling equipment to data centers. You look at Schneider. You look at SAP, which is going to benefit from the fact that AI gets taken up by more and more enterprises. So there's a bigger ecosystem than just the semiconductor companies or just the cloud companies.
And a global ecosystem, you name a couple of Europeans then. Uday Chiruvu, it's so good to have him in. Harding Loevner, we hope he'll come back soon. Meanwhile, coming up, rare earth stocks, they've been surging, we've just been talking about them. US-China trade spats have reignited. We're going to dig into that next. This is Bloomberg Tech. Rare earth and critical minerals producers surged after President Trump and China reignited fears of a potential trade spat between the two countries. But just today, JP Morgan articulating it will funnel $1.5 trillion into companies that will bolster U.S. security and resiliency, including rare earth minerals. For more, Bloomberg senior tech editor Mike Shepard joins us on what is a geopolitical story that is really affecting some of these stocks. What's your key takeaway today?
Well, the key takeaway is that the ball is still moving between the two sides. We are seeing J.D. Vance playing bad cop in the discussions right after Donald Trump signaled some openness to trying to back away from this standoff that just erupted over the past several days. J.D. Vance saying, look, it is up to China now to make the next move. Beijing, in turn, responding with the same, saying, look, it is Washington that now needs to make some sort of concession for us to relax some of these newly imposed export controls. And what is really hitting a nerve here in Washington is that it is a reimposition of export controls on rare earths that are critical to so many industries here in the U.S., everything from consumer electronics to defense. But it is also the imposition of controls on the technology used to extract it. And that poses a complication for U.S. efforts potentially to try to do more of this at home. China is exerting what it sees as leverage in rare earths because it holds roughly half of the world's reserves in rare earths, and it dominates production and refining of these materials, which are used, as I said, across the economy in iPhones, in consumer electronics, even smart vision goggles, night vision goggles used by the military. So we are seeing something crucial for the U.S., but China is also trying to exert this leverage to perhaps get some concessions from the U.S. on export controls governing things such as semiconductor manufacturing equipment and AI chips as well. And so this will be playing out rapidly. They don't have a lot of time to solve this before those tariffs that Donald Trump threatened take effect on November 1st. Now, the key thing, Carol, to watch later this week, will be that there will be a Chinese delegation here in D.C. for the IMF World Bank semi-annual meetings. We'll want to see what may emerge in terms of first steps toward a rapprochement.
Mike Shepard, we appreciate the breakdown. And look, let's stick with China. And joining us is Michelle Guider, CEO of the Kroc Institute for Tech Diplomacy in Purdue. Are we expecting a détente? Are we expecting a pullback from the brink? Because Friday, it felt very much alive and well when it comes to anxiety.
Well, I think what we're seeing is that this type of volatility is just the cost of doing business with a totalitarian state. And as long as it involves China, volatility and uncertainty in the market is really going to be a fact rather than a problem. And so I'd say there's two really important things here for business leaders to understand as we watch these negotiations continue. First is that every time that there's a 90-day extension here, it's not really a pause. We're just entering another inning of negotiations. And so this type of posturing is going to continue to happen, and markets need to bake that in. So it's like, make a note for February, because if we get to November and then we get another extension, then this is all going to happen again. So it's piece number one. Second, and even more importantly, is even when we have an agreement, we are doing business with a totalitarian state in the Chinese Communist Party. So we still can't relax, because they aren't in the business of honoring agreements up until the point that it becomes inconvenient for them. And so real stability here in the long term isn't going to happen until not just when there's another agreement, but real stability is going to come from when there's total American dominance in the next generation of industry, so China becomes a non-issue.
Well, let's talk about rare earths, for example. We had the CTO of Palantir, Michelle, on the show on Friday, and really Sham Sankar was saying he thinks the leverage is being exerted by China right here, right now, because of the independence starting to be shown with MP materials and the state being built there. The idea that the US has got the memo that they need to be more dependent on themselves for rare earths. Is that the reality here, and how quickly can that unfold?
Yeah, I think all of this is going to be a tit for tat and a grinding incremental struggle until the United States pulls away. And you mentioned Palantir. I know you were also talking to Palmer Luckey at Anduril last week. When you think about total American dominance in the next generation of industries, that's going to come from the private sector. And so what we're watching on a day-by-day basis is the governments go back and forth. And our government in the United States plays a really important role when it comes to defense, export controls, leveling the playing field like with tariffs. But when it comes to offense, that is going to be a private sector role. We have to build new technologies. We have to manufacture them here at home. We have to create new categories. We have to regain control over materials, over all of our supply chains, and we have to move really fast. And so you mentioned the investment at JP Morgan now, pumping billions or $1.5 trillion into really important national security industries. You talked about Palantir, Anduril. I was in Austin last week with the team at Saronic doing really amazing things with the next generation of autonomous vessels, building them here at home with speed and scale. That is what victory looks like.
The JP Morgan event and, well, signaling is $500 billion more than perhaps would have been anticipated, $1.5 trillion. What really can they do in terms of funneling, channeling money to these sorts of key industries? Because many would say, look, this is just the right sort of lip service you need to pay to the current administration.
Well, I think when they're pumping capital into really important businesses and industries, what they're allowing them to do is go faster. And I think that's been the name of the game here. China has a competitive edge because they can move fast since they're a very top-down totalitarian state. Here in the United States, speed has to be our next weapon. And so pumping capital into these really important industries is just going to enable us to move faster, to build, to rebuild, and to dominate these important sectors in order for us to lead the 21st century.
Michelle Guider at Saronic too. We've had them on the show and can't wait to talk more a little bit about autonomous vessels from the Kroc Institute. We so appreciate your time. Meanwhile, coming up, Elon Musk's Dubai Loop set to open in 2026, according to Emirati official. We'll talk about that plan next. This is Bloomberg Tech. Commuters in Dubai could travel along Elon Musk's underground transit system as soon as next year. That's according to an Emirati official. Now, the project, announced back in February by Musk's Boring Company, would be a rare success for the tunneling startup. The first phase is set to span 10.6 miles and carry 20,000 passengers an hour. It is part of the UAE's broader push to ease congestion from its growing population. Let's pivot now and look at what's happening in the crypto markets, because Bitcoin, boy, did we have a significant sell-off in the last 3 days. We want to push back to what happened on Friday evening. Crypto market experienced a brief but seriously intense crash. That was particularly felt in the altcoins, at one point losing as much as 40% within minutes as the 100% tariff threat on Chinese imports came from President Trump. Critics really talking about crypto market structure here, a lack of liquidity, excessive leverage, in particular some glitches that seem to occur in auto-deleveraging control mechanisms over in exchanges like Binance. But we keep an eye. Bitcoin now up and flat over the course of 3 days. Well, coming up, plenty more on OpenAI and Broadcom, the multi-year arrangement for custom chips and networking equipment that has sent Broadcom stock soaring. From New York, this is Bloomberg Tech. Welcome back to Bloomberg Tech. We check in on these markets that are back in rally mode. After Friday's anxiety, China, US dialing up once again the trade tensions, we bounced back as both seemed to calm rhetoric on the day. We were at almost 2 percentage points, particularly chip stocks. Let's just dive in and see what's happening in terms of the semiconductor index, which is basically got every single member in the green, all bar one. Nvidia up 2.8% as we continue to dial in on the AI opportunity. AMD is up 1.6%, but Broadcom leads the charge. More than 9%, $150 billion added in market capitalization as we see a deal to be helping with custom chips and indeed networking gear for OpenAI. And they don't even have to spend their own equity, it seems. Let's get to that key story of the day between Broadcom and OpenAI with Mandeep Singh, his Bloomberg Intelligence Global Head of Tech Research. And what's been so interesting about these golden touches from OpenAI for some of the big publicly traded companies is usually OpenAI has been given a sweetener by NVIDIA or by AMD. Broadcom, it just seems to be independence that they give to OpenAI.
Yeah, and I think the model here is the Google GPU model. I mean, when you think about Broadcom's almost $20 billion run rate for AI chips, more than half of that is from Google GPUs. So what OpenAI is saying is, you help us get there in terms of the ramp up like Google GPUs, which is in their 7th version of chips. I mean, and they've done it at a very quick pace. So from that perspective, it will help OpenAI reduce costs of up to 30 to 40% per gigawatt. If you think about, 1 gigawatt takes 40 to 50 billion. a 1 gigawatt with Broadcom chips will be at least 30 to 40% cheaper because the cost of those chips is the highest component in that gigawatt build out. So Broadcom helps you lower that cost of chips. And I think that's the model here that, yes, we want merchant silicon, but we also want custom silicon with Broadcom because that's the kind of diversification Google has, and that's why their cost of infrastructure is the lowest among all the hyperscalers.
Well, do the read across for the TPUs coming from Google. Who else is in the mix there? Because here Broadcom says, I'll help you custom design a chip. I'll help you with networking gear.
Yeah.
But there's a lot more to an AI data center than all of that.
Absolutely, and you need to source the power, you need all the other deals, but in the end, when you look at, what Amazon is trying to do with Trainium, they're doing that with Marvell. Microsoft is doing that with Marvell as well. And they haven't had the same kind of success that Google has had with TPUs, with Broadcom. So to my mind, it was natural for OpenAI to try with Broadcom, given the success that, again, Google has had compared to everyone else who is trying to do custom silicon. And yeah, they will do deals for power. That's what OpenAI is good at in terms of sourcing different providers. That's what Sam Altman has shown. But clearly, chips is the component that costs 60 to 70% of the data center. So you want to make sure you get that at the lowest cost. You won't be able to do that with NVIDIA. NVIDIA will still be the highest cost chip provider, even though they are making an investment. AMD will likely cut its cost, but it won't be the same performance per watt. Broadcom will do it custom specs for you, and then they can do it at scale that Google is doing.
And it's for inference. And I'm interested if you can interpret when OpenAI, Sam, and Hock Tan get together on a podcast and announce this sort of a deal. What is it that by understanding your own large language model and the needs of it that can really be built into the custom silicon?
I mean, just this past weekend, I read about tiny recursive models. So everyone is looking at how these large models can be run more efficiently in terms of inferencing costs. And whether it's tiny recursive models or some other form, you want minimum latency, as well as, power is your real constraint. So you want maximum performance per watt. So if you're optimizing for those two, you are going to go with custom silicon because that's what Google has shown us. They can run YouTube videos best because it's their custom silicon. No other merchant silicon can give you that kind of performance, and I think that's what OpenAI is going after.
Well, multi-year deal, $10 million is what they signaled back on their earnings at the beginning of September. Mandeep Singh and Bloomberg Intelligence really breaking down the why. Now let's go to Bloomberg's tech equity reporter, Ryan Vlastelica now, who can help talk through the US tech stocks, the rebound that we're seeing at the moment, and indeed what Oracle is up to on the day. But first, Ryan, we talk about the rally we're seeing in tech stocks. How much is that a relief from some of the talk between US and China over the weekend, or indeed this latest Broadcom deal?
Hey, good morning. So when I came in this morning, everything was pretty broadly higher, which did seem to be some relief over the latest developments with respect to China. But certainly when we got the news about Broadcom and OpenAI, that stock absolutely skyrocketed. I think you mentioned before, $140 or so billion in added market cap really helped augment the moves that we are seeing in the chip space today. And obviously this comes in the wake of several other deals involving OpenAI, AMD, Oracle, NVIDIA, so on and so forth. Obviously this has become an incredibly influential company that is really just driving massive gains across the space.
Well, talking of massive gains throughout the year, but now perhaps also rallying on the day is Oracle. We've had an interesting narrative come back to a really realization last week that maybe Oracle doesn't make that much margin every time that it's selling compute to OpenAI. What has Oracle got on the agenda this week and the time that they need to prove it?
Well, they have their AI World Conference this week. I believe it starts today and goes all the way till Thursday. A lot of highlights. There's going to be a couple of keynotes tomorrow, including from Larry Ellison and the new co-CEO. There's going to be an analyst day on Thursday where people are expecting some updated financial targets. So there is a lot that's going on this week, and there's going to be a lot that people are going to be paying attention to. One person I spoke to said he's actually hoping Oracle increases its CapEx guidance here at the conference, because that would be an indication that people are feeling pretty confident that the recent deal they announced with OpenAI, which was, I think, for $300 billion over 5 years, that money is going to be a pretty reliable driver for them. There is some concern right now about, where is all this money coming from? How is OpenAI going to finance all these massive deals it's doing right now? So maybe getting some more CapEx figures there, that's something people are watching out for to maybe justify some of the moves that we've been seeing.
I mean, and 35 billion was where CapEx was meant to be hitting in fiscal 2026. They see that. That was up more than 60% year on year. So Ryan, talk to some of that anxiety about where money is ultimately coming from. Do you think this week we will still see the concerns around an AI bubble?
I think it's going to be hard to ease those concerns completely unless we get some real sort of updated numbers out of some of these companies. I know a lot of people are really looking ahead to the upcoming earnings season and see what we get out of Microsoft and Amazon and Alphabet and Meta, all the major cloud companies, all the major customers to NVIDIA and the other AI infrastructure stocks. That's going to be really key for people to feel like that the spending train continues to move on. And of course, anything we get that sort of speaks to the ROI that these companies are seeing from AI, that's going to help ease concerns as well.
Bloomberg's Ryan Veselika, thank you very much indeed for joining. Meanwhile, coming up, Warner Brothers robust a takeover approach from Paramount Skydance. More on that next, and the future of the companies. This is Bloomberg Tech.
You actually need more content to yield more engagement. And so we would actually want to be in the business through whatever lens we were looking at of actually producing more, more movies, more television series, more to get to scale, because you need that content, you need that great storytelling to yield engagement. And from that standpoint, we're also in the business first and foremost of creating long-term value creation.
David Ellison there, CEO of Paramount Skydance, at, of course, our Screen Time Summit last week. For a moment, his company, it seems, won't be getting more content from a takeover of Warner Brothers Discovery. According to sources, Warner Brothers rejected Paramount's offer for being too low. Let's get more on this from Geetha Raghunathan. She's US media analyst from Bloomberg Intelligence. And it seems from your analysis that really Paramount needs the content, perhaps more than Warner Brothers needs the price point.
Absolutely. Paramount really needs a strategy, Caroline. So yes, they have Skydance. That deal, it took, as you well know, it took months, played out for months, but finally everything was done and dusted in early August. But really, I mean, as you kind of look at Paramount, you kind of look at the assets, you look at the business, there's really not a whole lot to get excited about. You have the linear TV networks. They bring in majority of the profits. But remember, that's a declining business. We've seen profits almost being halved over the past 4 to 5 years. You have streaming, which is the way of the future, but it's really not generating profits yet. And it's a subscale business when you compare it to the likes of Netflix or Amazon or even Disney Plus. They have only about 70 million subscribers. So they absolutely need content. There's no doubt about it. Warner Brothers, arguably one of the best businesses out there in the media ecosystem. You just look at some of the IP. It's top tier IP. I mean, whether you're thinking of Game of Thrones or Harry Potter or DC Comics, they have it all. So I think definitely that Paramount needs them pretty badly.
Let's talk about what Warner Brothers Discovery is currently up to, though. They're splitting in two, feeling that certainly more value can be accreted to the streaming and the movie side. What then happens to your average cable that they're continuing to have as a separate part of the company?
Yeah, so that really, I think, is the major dilemma right now for David Zaslav and his team at Warner Brothers Discovery, because they know very well that once they split the company, I mean, streaming and studios will be off to a fabulous start. There's going to be a lot of demand of, in terms of content. The profitability looks good. The real problem is with what is called the global networks business, and which is being called Discovery Global, just to kind of reflect all of the cable networks. So the problem here, again, is right now, actually, it brings in majority of the company's profits. So it's about 75 to 80% of the company's profit. But again, here it's the same old story, which is, advertising revenue, affiliate revenue in decline. So we're going to see, EBITDA fall. And so that's kind of where really the big head scratcher is for David Zaslav, because the offer that Paramount is giving now is for the entire company. So he's also he can get to offload the TV networks, basically kind of say bye-bye and not have to worry about it. If you go through with the split, the problem is what happens to the TV networks. There's not a whole lot of, bright prospects in terms of growth. And the bigger problem is that it will also have a lot of the debt. Remember, Warner Brothers right now has about $30 to $35 billion in debt, majority of which will travel with that global networks segment.
The story will keep unfolding. We thank you, Geetha Ranganathan, US media and analyst for Bloomberg Intelligence. Sticking on entertainment, shares of Disney, they spiked earlier this morning after Taylor Swift announced new content, including a docuseries that would premiere on Disney Plus in December. Company, as you see, shares up 1.5%, at one point up 3.5% in pre-market trading. Really another sign of the economic power of Taylor Swift. Meanwhile, President Trump's proposed TikTok transfer plan would give Washington greater oversight over the app's safety and data security and could allow US authorities access to user data. For more on the future of TikTok, Bloomberg's Alex Levine, who covers the platform, joins us now. And we've got to put us in the context of US-China diplomacy, or lack thereof at the moment, and the worries about dialing up of trade tensions and what that means for TikTok. But Alex, what's really important about your Business Week story is it shows how much control the US government can have over data, not just the Chinese government now.
Absolutely. There's still lots of details around this deal that are being worked out. And as you said, there's questions about US-China relations and how things could really change as they have over the last couple of days that could affect how this deal plays out. But one thing we've been very interested in focusing on is the role that the US government could play, really raising the question that the US government may be able to do some things on TikTok here that Americans have for many years been concerned China is doing on its own version of TikTok there, in potentially determining, inspecting code on the app and in potentially determining how the algorithm is retrained. There's some sort of reading between the lines in the executive order that President Trump signed on TikTok, and some briefing that the White House put out with reporters that could suggest that the White House may actually have more sway over a future TikTok than people may be aware of.
Yeah, there's a line in your story when President Trump was quoted as saying, if I could make it 100% MAGA, I would, he said from the Oval Office, September the 25th, but it's not going to work out that way. Just, Alex, we have so many questions around ensuring that these social media companies aren't biased in any way. So what do you think ultimately will become of trying to signal that lack of bias or not in the future for TikTok?
Well, I think what the rest of that quote is that Trump really wants to ensure that there is no bias on the platform. But I think that based on what we have seen with other social media platforms and the way that they have gone, especially since President Trump has taken office again, we know that there are really no guarantees, and also that ownership of these platforms really matters. When Elon Musk took over Twitter, which he now renamed to X, it became a very political platform. Even though he allowed a lot more speech to flourish on the platform than previously, it really became a bullhorn for his own politics. Similarly, since Trump took office, we saw that Mark Zuckerberg has made Meta platforms more in line with the Trump administration's policies in allowing more speech. So I think even though Trump, reassured everybody in the Oval Office and that statement that you just pointed to, that he does want this to be a platform that's not just 100% MAGA, but that does include, perspectives and philosophies and ideologies from across the spectrum, there is always the chance that the ownership could have some sort of a role in what people ultimately see on the platform.
And talking about platform, TikTok has not been pulled off the table at this point, according to Jameson Greer, who's negotiating with China. Bloomberg's Alex Levine, thanks for the update. Coming up, we'll discuss the business of space, the growing space tourism industry, with Ezine Uzo-Okoro from the Harvard Belfer Center. This is Bloomberg Tech. SpaceX plans to launch Flight 11 of its Starship mega rocket tonight, the last one using Starship version 2. This is the company prepares to transition to Starship version 3, which is expected to perform orbital launches and recoveries. Joining us now is Ezine Uzo-Okoro, who's Senior Fellow at the Harvard Belfer Center. You used to be serving as a NASA executive and a former Assistant Director for Space Policy at the White House, so you are in the know. Just how crucial is this test later this evening?
Oh, it's critically important, because what we're going to see are thermal tests, some stress tests, some flight maneuvers as they prepare for the next version, as you indicated. And it's going to take them several months, because they are going to ensure that Starship version 3 will go into orbit, conduct some recoveries, and it will be very exciting to see what's coming down from SpaceX after that. I think that the market will be very interested in where this unstoppable company is headed.
And put into the context of how unstoppable it is, because we've had a slight delay on delivering Amazon's Kuiper satellites into low mid-Earth orbit, but that's still on track. And the fact that basically SpaceX is helping other competitors enter and get into space, what does that signal about its dominance still and Elon Musk's?
I think that it's just clear how important this company is as a whole, not just as a competitor, but as a leader in the sector. So as a leader in space at launch, they are able to help competitors get up to space. And as a leader in broadband communications and in the space sector writ large, they are able to continue to accelerate their progress. So this is very big. And with Kuiper, we also have to acknowledge that what this does is it's great news for the U.S. geostrategically, since that we will now have at least two major players in the broadband from space ecosystem, as other countries, continue to build their satellite constellations to provide the same service.
When we think about dominance, not only in the provision of satellite communication, but just in rockets full blown, how are we seeing other companies perform? I mean, Blue Origin has been active in the last month.
They have been, and they have been doing quite well. So you see New Shepard, which was designed for commercial purposes, has taken 6 additional people up to space, and their numbers are totaling at about 86, which is exciting for space tourism. You and I should be able to get on their backlog of space tourist tickets, perhaps soon as they continue to complete these launches. So it's really important to see the companies continue to show consistency, when you, particularly in a business that's so complex, and that consistency really helps to ensure that the market keeps moving, the space economy keeps growing bigger and bigger.
Are they getting consistency from NASA at the moment? I put a pointed question to you because our own Ed Ludlow has been breaking extraordinary stories here at Bloomberg, and really one of them being that Jared Isaacman is perhaps back in the mix, discussions with President Trump to potentially lead NASA, him, of course, of Shift 4 payments and close relationship with himself being an astronaut and having a relationship with, of course, Elon Musk. Is there a void felt in NASA right now without someone at the helm?
Well, the agency is closed at the moment, given the government shutdown.
True.
There's that political pause. And secondly, you have to think of this technically as well as economically. So technically, while NASA is needed, these companies are mature enough that they can continue to show consistency in their products without NASA, conducting reviews, which is fantastic news. And then economically, quite like with space tourism and with SpaceX's Starship tests, you don't really need the agency around as these companies continue to show that the commercial space sector continues to grow. So we do need them politically and strategically for the future. But the companies are showing that they are part of a growing asset class and they're part of a mature sector, and they are not completely reliant on an agency that is currently closed.
What it seems, though, is that perhaps mission operations over at NASA have been saying perhaps, look, there will still be stop-start when it comes to getting to the moon or getting to Mars. Just update us on what the longer-term goals are for NASA and for U.S. space more broadly, briefly.
So currently, the Trump administration is supportive of us returning to the moon and then moving on to Mars. They are interested in moving that timeline closer so that we get there sooner than probably 2028. And at the intersection of all those timelines is SpaceX. And not a surprise, they are, going to supply some of the critical transportation. And there are some NASA vehicles that are going to also conduct these transportation to the moon and elsewhere. But we do stand a good chance to meet both the administration's goals and NASA's goals of exploration, just given how mature and consistent the technical team are.
Ezenezu Okoro, we appreciate your time at the Harvard Belfer Center. Thank you. That does it for this edition of Bloomberg Tech. Markets rallying today. Don't forget our podcast. This is Bloomberg.